Hi, I'm Mike Elliott, and you're watching investFeed TV. Today, we'll be speaking to Mr. Richard Gobel. He's the owner and operator of Strategic Stock Trade. Mr. Gobel has more than 30 years of experience in the investment business and has developed a trading strategy based on technical analysis and proprietary algorithms he's developed himself. Good afternoon, Richard. Thanks for joining us.
Well, thank you, Mike. I certainly appreciate the time with you.
So tell us about your trading background, how you got started, and a little bit about your trading style or strategy.
Okay. As you alluded to there at the intro, I've been involved in the business for 30 plus years. I've been with various financial firms managing people's money individually and so on and so forth over those 30 plus years. And last 5 years, I just kind of got tired of it, dealing with all the rules and regulations and dealing with clients. And I just thought I needed to switch gears and go on to something new. And I always like to do stock trading, so I thought that I would try to develop a strategy or a process that was able to at least compete on a level with the hedge funds and the algorithm programmed machines that basically have taken over the stock market here over the last 5 to 10 years. And give me some type of a fighting chance. Now, I was going to say, so we developed an algorithm trading process here about 5 years ago, and then we started our own website here after we developed that plan, and so that's what we've been doing ever since.
And how do you think the market is shaping up after the election, and what sectors do you think maybe present some of the best opportunities right now for traders and investors?
Well, there's no question in my mind, according to my proprietary algorithm trading process here, and let me just say, I'm neither a bull nor a bear. I know that terminology is thrown around on a daily basis. I'm oversold versus overbought.
Okay.
That's kind of how I view the markets, and without question, currently the market is overbought and extreme overbought on multiple time frames, not just a daily time frame, but when we're looking at the weekly and the monthly time frames, we are near extreme overbought. And at the end of the interview here, I can show you one of my the S&P 500 screen that I use to determine that.
That would be great.
Process, and you'll be able to see it for yourself on exactly where we are.
Very good. Great. Well, so given that, I mean, what do you, on your, based on your system, and we definitely want to take a look at that, but tell us, what are some of your favorite stocks right now and why?
Yeah, my favorite sector without question is the gold sector.
Okay.
Whether it's gold or the gold miners, junior gold miners, I just think that that's a sector in 2017 that is going to outperform all other sectors out there. As a matter of fact, it's been doing very well in 2017, the end of 2016, not getting much press or talked about, but the returns so far this year are fantastic, and I just think that you're going to see parabolic returns in gold as the systemic events globally start to take hold in the markets globally. We can talk China, we can talk Japan, Russia, and so on and so forth, but there's going to be a lot of systemic events that are not on the market's radar right now that ultimately will pop up on the radar. And I think if you're positioned in gold miners, you're going to see some terrific returns in 2017 going forward.
And what areas of the market right now do you think maybe are, or if any, are maybe a little bit undervalued?
Right now, as far as undervalued sectors are concerned in the market, I got to tell you, I don't really see anything undervalued. When I look at the different indexes from the S&P to the Dow to the Russell 2000 to the NASDAQ, not one of those indexes is undervalued. As a matter of fact, they are extraordinarily overvalued on all time frames, and they're pushing their +3 standard deviations. Now, that's kind of unheard of when you have all the indexes at the same time in those parabolic ranges there. So There's nothing that longer term in the equity side that catches my fancy. You can find intraday short-term type of trades, but if you're going to do that, and I certainly do that, I rely on my strategic daily numbers, and when they are extreme oversold, I will buy something for a short-term trade, but nothing for a long-term trade at all.
Okay, so two last things. One, tell us a little bit more. Maybe show us, like you said, your screen on how you use strategic stock trade, and then tell us how, as an investor, I can. Do you have a newsletter? How can I find out more? How can I use strategic stock trade to make some decisions in the market?
Absolutely, fantastic. Okay, first and foremost, the foundation of strategic stock trading process is to buy securities that are extremely oversold. Mm-hmm. On the daily time frame, if we're looking for swing trades that could be held for a few days, a few weeks, or if you're trading intraday, we will look at the 60-minute time frame to find our extreme oversold stocks, and then flip them within 1 day time period there.
Okay.
So as I said, this is a proprietary algorithm, numbers-based process that focuses on buying extreme oversold stocks or bonds, and then selling those securities when they're no longer oversold. Now, what's totally different about our trading process, and this is why I say I'm neither bull nor bear at any given time, is because it does not rely on the price of securities. That does not factor into our decision-making process whatsoever, the price of the security. The extreme oversold, as I said, is a proprietary number between 0 and 1. The extreme overbought is a number between 99 and 100. And once those numbers are reached, those securities become high on our watch list if they have the extreme oversold or the extreme overbought number for shorting in the case of extreme overbought. And just as important as that process is that we use multiple screens and multiple time durations for confirmation of our trades. Now, if you're looking for a quick flip intraday type of a trade, we base it off the 60-minute strategic number. And if you're looking for a swing trade, a day, 2 days, a week or so, okay, we use the daily strategic stock trade number, and we also look at the weekly time frame to give us confirmation whether that stock is in a bullish uptrend or a bearish downtrend. Okay, and again, the key is here, the multiple time frame gives traders confidence in those specific trades. So having an identifiable process and a repeatable process is the key to the strategic stock trading process. And that's how it works. And I can show you a screen on my computer, if you will, if we have time to do that.
Yes,
I can show you exactly
let's take a look.
An index, for example, the S&P 500 stock index looks like on the daily, weekly, monthly time frame. And the reason why I am currently not saying that we are extremely overbought, and it's very difficult to be chasing in this environment. Okay, we've got the S&P. This is my internal computer screen that my subscribers use every day in the chat room at www.strategicstocktrade.com. Now, what we have here is the daily time frame of the S&P 500. And the second quadrant down here that I'm circling is SST strategic numbers. This is our proprietary algorithm number. And over here on the right-hand side of the screen on the daily time frame, it shows a 95.05. Anything over 90 is overbought. So this is starting to get deep overbought on a daily time frame. And the next quadrant down is our risk range. And hopefully you're able to see this. Currently, the S&P 500 is trading outside the top of its daily risk range, which is 2,322. Currently, the price is 2,329.
Historically, when's the last time we saw this severe of an overbought condition in the S&P?
Yes, on a daily time frame, it's not that unusual. We see it quite frequently. But what is going to be different here is when I switch screens to the weekly, and this is where it's really going to give you how unusual it is on the weekly time frame. Keeping in mind, we just started the first new week in second week in February here. So let me switch over to this weekly time frame here. Now the S&P on the weekly time frame, 99.56. That is extremely overbought, on its way to extraordinarily overbought. And you asked the last question, last time we saw a number 99.56 on the weekly time frame of the S&P 500. Let me back up the screen here a little bit. Right here, the week ended on August 19th, 2016. We had a 99.44. So starting today, this number is even higher than that. Prior to that, I have to go all the way back to get a number that high. There's a 99.79 on the S&P 500 back on the week ended October 29th, 2010. Now we've seen the numbers up near this area. Here's a 98.89 back in November 2013. We have a number here of, here's a 99.95 back in March 2012.
So when do you think we'll see a correction? So in 2010, when we had that overbought situation, I mean, what was the time frame before we saw a major correction?
Yeah, back in this 2000 time frame, another important factor here, and I know it's going to be hard to see this because I've backed it up so far, is we never got to the top of this red line, which is the +3 standard deviation, before we saw a breakdown to the 22-day moving average, and that took a few weeks to do that. But let me make this screen a little bit bigger for you here, and unfortunately my screen froze here for a couple of seconds. Point being, right now we are trading currently outside the +3 standard deviation on a weekly time frame for the S&P 500. Highly unusual, does not happen very often at all for that to happen on a weekly time frame. So this, at any time, whether it's tomorrow, Friday, next week, we're living on borrowed time in this market here. And if you have any type of a risk management process, it's going to be very difficult to be chasing equity stock or the indexes up here at these types of parabolic highs here, because invariably they're going to come down and they're going to retest their 22-day moving average here. My screen's back up here. And again, as I said, up here at the +3 standard deviation does not happen very often. When it does, you better stand up and take notice, because it's not going to stay there very long. And invariably, it's going to come down at a minimum to at least the 22-day moving average, which is going to be around the 2,235 level in the S&P. So you're looking at almost a 100-point move just to get back down to the 22-day moving average. So,
wow.
Again, this is how my numbers are used. And just real quick, this is the monthly time frame, Mr. Elliott. 98.30 on the monthly time frame.
Wow.
We're not even talking weekly here. I mean, you've got to now go back on the monthly time frame to May 2013 to see that happen.
So we're due for a correction here in any day now. Overdue, actually.
I don't know if I want to say any day, but from any day to any week, we're due for a big correction here. It may coincide with the Fed raising interest rates on March the 15th, something else to keep an eye on. But this game is going to come crumbling down, and it's just going to be, the question is going to be to what extent.
It's not going to take a major catalyst. Yeah, it's not going to take much to right. So technically, it's already built in. The correction's already imminent. It's just some kind of fundamental catalyst to push it over the edge. is all it
What
needs.
is that's right. What is that event? What is that snowflake that's going to cause this market to come tumbling down? That is the question. It's going to happen. Mathematically, these numbers cannot stay up here. It's mathematically impossible. We know that. They have to come down.
Well, that's great insight, Richard. That's really good. Thanks for showing us that. That's a great illustration, and I think that sentiment is out there right now. I don't think anybody's explained it as well as you have. So I want to thank you for those insights. So I wanted to ask you though, before we close, you're using investFeed.com. Anything you can tell us about that? Maybe why you like it, why you use it? Do you get some use out of it? What are your thoughts on that?
Yeah, I think investFeed is a fantastic financial social media website. I think that I started using it. I'm relatively new, I guess. Maybe in the last couple of months I came across it there. And I think what is so nice about that particular site, first of all, it's very clean looking, but most importantly, from a personal standpoint, because I've been on other websites, you don't get a lot of bickering back and forth between individuals who post on that particular site. Everybody allows you to do your post, and nobody says, well, that's wrong, and here's why it's wrong. That you do your post, and everybody kind of moves on. Nobody's trying to bring anybody else down on that particular site. So it's well filtered, it's very clean, and they keep an eye on those types of activities there. And I think it's only going to get bigger and better.
Well, thanks for your input. Thanks for your insights. Again, we hope to catch up with you again soon and have you on the show again. Any final comments you want to give investors, or just tell us, what's the easiest way to get started on strategic stock trade?
Yeah, the easiest way is just visit us at our homepage, www.strategicstocktrade.com, and takes you right to the homepage. And there's a link if it's a monthly, subscriber web-based website there, but there is a link on the homepage right at the end that talks about my process here that's open for everybody. It's not under lock and key. It's open for everybody. It's a great audio and visual tutorial of the process that we just described today.
Richard, really, really appreciate you taking the time out of your busy day to join us. And again, a real pleasure, and we hope to have you on the show again soon.
Thank you very much, Mike. I appreciate it.
Thank you. You as well. We've been talking to Mr. Richard Gobel. He's the owner and operator of Strategic Stock Trade. To learn more about this unique trading strategy, please visit his website at www.strategicstocktrade.com. And thanks again for watching investFeed TV.